guys to do one thing, right? Go back to your designated group chats, wherever it is, wherever you may be, WhatsApp, Telegram. Go back on it and sort it like crazy. Let people know to jump on this call. It's about to get maxed out any second right now. Go back in your group chat and go crazy. Let them know that we have a very, very special guest on the call today. I'm not going to carry on speaking like this because I can see this individual's head is getting a bit big. No, I'm playing with you, bro. I know you're smiling. How many parties was going to call? 518. Guys, let's go crazy. Let's go crazy. Sheesh. Sheesh, the chat box is on fire. It is on fire. Cool. So before we're going to get started in a couple of more minutes, just waiting for the participants to go up. A lot of people are still joining. But before that, I want to be able to know how you guys have been finding this bootcamp. How much value have you gained over the past 4 days? And how grateful are we to the leaders who organized this? Guys, go on the chat box and let the people who organized this, let it be known how much you appreciate them. Let it know how much you appreciate them for organizing this call. They went through great depths in order for them to organize this. So all of you guys can eat off this. And a lot of you guys have made a lot of notes. So one thing I'll say, to end this bootcamp off correctly the right way, take all the distractions away, put your phones on mute, get your notepad, get your laptop ready, get everything ready, because what this individual is about to go through is about to change your whole trading game as we know it. Your whole trading game as we know it. So like I said, let's show them the appreciation that they truly deserve. Let's go on the group chat. You can drop wherever you want, wherever you put your mind to it, right? Wherever. It can be an emoji, it can be anything. Just show them some appreciation because, like I said, our trading games will never be the same. I know our special guest is patiently waiting, so we're going to get started in a couple of more minutes, guys. We're about to touch 650 family members on the call. I know he's ready. I know I'm ready. I hope you're all ready. We're going to get started in a couple of more minutes, guys. Just bear with it. Just give it 1 more minute. We're going to get started. Wally, nod your head if you're ready, bro. Make sure you ring me tonight after the call. Yo, the chat box is going crazy. I see someone said dropped a walnut. COB, smart money. Let's go. Sheesh, we just passed over 650 family members. Let's get this to 700, and then we won't wait any longer. I know it's gonna get maxed out to 1,000 within a couple of more minutes, but it's not fair on the guys that are waiting. So we're gonna get started in a couple of more minutes. Let's let it just get to about 680, 690, and we're literally gonna get started. Yo, smart money, the bank, market destroys, Wally the hedge fund. Damn, Wally, you're getting a lot of compliments already, bro. You haven't even started speaking yet. Yeah, I know. What can you do, eh? Cool. 680 people above. It's about to hit 700. Amazing. So we're going to get straight to it. Guys, I hope you're all ready. Like I said, I hope your laptops are ready, notepads are ready. Today's call is about to change your whole trading game forever. So that being said, we already know who the special guest is. I'm not going to take too much time on introducing himself because, the name speaks for itself. But like I said, this guy, he's a beloved friend to me. He's a brother to me. I've known him for a very long time. He's actually one of the very first originals that got started with me, when we first got started roughly about 2 years ago. So, and he stayed loyal. He stayed dedicated to his craft. He was ready to go. Oops, sorry about that. Yeah, I'm back. I'm getting calls. Yeah, so like I said, he was dedicated to his craft. He put his head down, worked in silence, and now he is who he is today due to the resilience and commitment that he put in within himself with his goals. And, I can be the first to say we all know he's a humble individual, but a lot of the goals that he had 2 years ago, he's absolutely smashed through it, and with the power of trading. Yep, sorry, I got muted again. Yeah, the skills, like I said, sorry. So the skill set alone, has completely changed the whole dynamics of his life. So like I said, he's here today to share his journey, and he's here today to give you guys tips and new strategies and help within your trading game. So without further ado, Mr. I'm not gonna no income disclaimers, but Mr. Multi trader, the one, the only, the legend, the myth, my brother, Mr. Wally Khan.
Hello. Can everyone hear me? If you guys can hear me, just drop like a 111 in the chat box. Bloody hell, that's a lot of ones. Okay. So as you guys know, you've had the 4 or 5 days of the boot camp, and now my session today is just mainly going to be a Q&A. I know a lot of people have a lot of questions when you see my charts on Telegram, or you see something that I post on Instagram, whatever. I get a lot of questions about a lot of things. So throughout the bootcamp, if there's a few things that you guys didn't understand, or if there was a few things that you'd want to cover again, if you guys would want to see top-down analysis, how to mark out a chart from the monthly time frame all the way down to the 1 minute, then yeah, feel free to just drop in the chat box and we'll go down. Top down, 1 to 1. Cool. All right, so this is going to be like, yeah, if we do it like this, then it's going to be quite messy. Let me see if I can share my screen. All right, if you guys can see my screen, just drop something in the chat box so I know everyone's. Three candles in balance. Okay, cool. I think top-down analysis got the most votes, in a sense, whatever you want to call it, for it. So we'll start off with that confirmation checklist as well. Okay, we'll go on a. Okay, we can see it, bro. I'll pass on questions. Cool. I was thinking why the chat box turned off. Okay, well, I'll start off with some of the trades I've taken this week. I know I went over this yesterday, but majority of you went on the call yesterday. So I'll go through the trades that I took this week, then I'll go through some of the big trades that I caught in the last year or so, some of the biggest trades, monumental trades for me personally. So this is the main trade that I took this week. I was buying and selling this at the same time. I had a hedge position in it. Now my buys in terms of profits for more pips. So starting off with EuroCAD, let's break it down from the monthly. Now, one thing you guys need to ask yourself, actually putting a confirmation checklist, a personal confirmation checklist is this. First thing and most important thing anywhere in the market is market structure. Okay, market structure, and that's from weekly, monthly, higher time frames. Okay. The second thing I try to establish on the chart is order flow. What directions does the institutions want to take the currency? I like to look for is lower time frame points of interest in higher time frame points of interest. So I like to correlate the points of interest from higher time frame to lower time frame, and then just final thing, calculating risk to reward and entering the position, calculating RR. So you need to justify to yourself, is the trade worth it or not? But these are basically, obviously underneath each point there's many points, but we'll go over these as we go through the call. But these are the most important things when you're, I'll kick myself off this. When you open up any chart. One thing I'll say as well, if you open up a chart and as soon as you look at it, if you can't tell, for example, on the daily time frame, as soon as you look at it on the daily time frame, you can't tell whether you should be looking to buy this currency or sell this currency, then it's a trade that you should stay away from. Right. Possible. How do you start identifying weakness? Okay, cool. I'll go over that as well. I think there's an example of it in here anyway, so yeah, it'll be good. We can cover through that. So yeah, starting off with market structure, let's take a look at EuroCAD on the monthly time frame. Well, you can see the most recent structure, and when it comes to analyzing as well, this is one thing I mentioned a lot. How much data should you be looking at? Are you over analyzing or under analyzing? Well, the median is between 180 to 250 candles you want to keep your eye on. And what do you call it? If you're looking at less data than that, then you're basically missing out a lot of the potential of the chart. And if you're looking at more data than that, then you're confusing yourself. You've got too much information in front of you. So this is around the right amount of candles. If 12 makes a month, then about 20 years of data, which you can see from 2003 all the way to 2020. So it's approximately 20 years of data, 250 candles. What I can see is we started off with a low, we made a high, we made a higher low, we made a higher high, higher low, higher high, higher low. The next thing that we need to do on the monthly time frame is make a higher high. But take a look at this week, okay? So naturally on the monthly time frame, in terms of structure, we should be making a higher high. But one thing I'd like to notice is the fact that we had this monthly wick, okay? And that reacted clearly off something from here, and then it caused, if this was a slight like 50 pip drop on the monthly candle, it won't bother me, but this is approximately a 600 pip drop. So the market moved 600 pips for some reason in this area here. See what the chat box is saying, how to understand imbalances on the market. Cool. I'll go over every single point as it comes up in the examples. I think that'll be the best way to go over it, instead of like trying to search for examples. If you go down, top down, and keep these questions in mind, and we'll go from one by one. Okay, so I was saying, just to identify that this reacted from somewhere inside this candle and had a good 600 pip close, which led to, and then followed by a bearish candle. And now we have some indecision here. But we can see structure on the monthly is bullish, but the order flow is potentially become bearish. It was bullish here where it was respecting only the higher points and it was violating the highs. It was only respecting the lows. So it's following structure. You can see how it violated every high. But here, because it failed to violate the high, it's reacting off it. We can say order flow in itself is bearish. Jump down to weekly time frame. Let's see what we see here. Well, again, we got the same market structure. We got highs, successful high highs and high lows. We can see here in the last couple of weeks, we've been struggling to break past this last high point. So we can see we can count this as a sense as momentum dying out. The market, the buyers are starting to leave the market. Now, if you start looking for our points of interest on the monthly, weekly, where this reacted from, it becomes very obvious where it came off from. It came from inside this last buy before you sell candle here. Okay. So I got that in mind. Jump down from let's look for it. Weekly to daily. What I can see is, again, come back to most recent market structure, see what's happening. I can see we had a downtrend where we had highs, lows, low highs, low lows, low highs, low lows. And then here we broke past the previous high and we had a higher high. So what this started to say from the monthly time frame structure is bullish in a sense. Market structure is bullish, but order flow is bearish. Same thing was weekly. And now on daily, we can see that order flow is bullish, but market structure here is bearish. Well, what I mean by that is market structure is bullish, order flow is potentially bearish, because we cleared these equal highs here, these relative equal highs, or you can even look at this as a buying climax, ST, UT, and UTAD. So distribution phase, in a sense, taking place here. Okay, so that's all I need to see on the daily. Drop down to 4 hours and see what's going on here. Actually, one thing I like to keep in mind, one thing I like to mention is when it comes to identifying your swing points, you need to see how much of a retracement there is. Are you in a discount or are you in a premium in terms of the market? Have you gone past the 50% fib? That's the first thing you want to see. Okay, have you gone past the 50% fib? If the market has gone more than 50%, then you can, me personally, when I look at structure, I only count pullbacks that have gone more than 50%. If it goes less than 50%, I'll count the next high within that range. Okay, so here I can see it's gone more than 50%, so we've got a valid pullback taking place, so we know we're pulling back. Okay, it's not just a retracement, it's an actual pullback, and it's happening in the form of a flag. Okay, drop down to 4 hours from here and see what's going on in the market. We know 4 hours is a good time frame to start identifying like your points of interest for the week, because that's you can say a 4 hour swing takes around a week to play out. A 4 hour time frame swing But yeah, coming back to this, what can we see on the 4-hour time frame? Well, let's start marking out from an institutional perspective now. Let's start looking at our equal highs, equal lows, where mitigations are taking place, all of that kind of stuff. So first thing that stands out to me is the fact that we have equal lows here. Okay, market will naturally be gravitated towards them. The market will always be attracted towards equal lows because this is where liquidity is sitting and the institutions want to pinch that liquidity. Now, in terms of what's happening on the 4-hour time frame, well, let's look for imbalances as high as we can possibly get them. And I can see we got an imbalance here that needs to get filled in, and this is one thing that we need to keep an eye out for. I've mentioned this multiple times on calls before. I don't like to trade imbalances which are only partially filled. I want the imbalance to be fully filled in. Okay, if it's not fully filled in, then the market can still go towards them. Okay, now let's see what's happening in terms of structure. I can see I marked out equal lows wherever, and I can see that you had a high, a low, a lower high, and then this is the lower low, so that's the whole swing. Actually, lower high, lower low, higher high, and then from here we failed to make new lows or new highs. We've just been consolidating in a range. Okay. And when we're consolidating, naturally, retail mindset, what you'd want to do is wait for a break and retest kind of thing, but that's not what we're going to look for. We're going to try seeing where the market is reacting from each and every given time. So 4-hour time frame, I can see this is where the last reaction took place. This candle came, mitigated this buy before you sell, and started to drop. Now let's see what's happening in this drop area. Okay, what can we see here? We had 0.1 PSY buying climax ST UT UTAD, and then what you call it had taken place here. Oh, how do you like it? Because what's the difference between a pullback and a retracement? Look, pullback and a correction. Cool. Let me make note. Okay, cool. I was thinking of an example in my head where I can actually find one of the points that I mentioned. So I've got one in my head now, so we'll go through that. So again, coming back to this, I can see we've got a distribution taking place and we had our test here. So naturally, the next thing that you want to see after a test is an LPS. Okay, we want to see a test of the order block that formed when the test was done. So in a sense, a double mitigation taking place. That's the logic behind the LPS phase. Now, I can see we got this massive 4-hour point of interest here. Okay, but this massive 4-hour point of interest now, market could react from here. Is the closest thing that we're coming towards. And if you were to look at this in terms of recent structure, this low is taken also. Looking at what's happening on the 4-hour time frame, we can anticipate this low to be taken out. Okay. I'll get into that. So again, I had this candle marked out as a 4-hour point of interest. Now let's drop down to 1 hour and continue refining and see what we can find. Now, first thing I can see is I have an imbalance here that needs to get filled in. So I'm going to just get rid of some of the markings to make this more clean. I can see I got an imbalance that needs to be filled in. But one thing I can also see is when price came here, we had a very strong reaction from what happened here. Oh, I'm sure you guys shouldn't be asking what order block is if you went through the whole 4-day boot camp, because that's what these guys have been trying to teach you. Okay, sorry, I was saying, if you look at this here, the price action that took place here, we can see that we filled in around 50% of an imbalance here, and then we dropped, and then we came back up again, and this is where I started to anticipate my initial sells. So the first sell I got is in the Banks Telegram, I believe, that's where I sent it, was from this region here. So we're going to break into that. I'm going to just jump into replay mode from now, just to make the chart each point cleaner and to make all the points of interest fit in one screen. So you can see we had the reaction here. So let's break down from 1 hour time frame to 15-minute and all the way down to 5 minutes, see what's going on here. T-base, highs and lows of wicks are bodies. When it comes to highs and lows, I like full body closures. I don't like wicks. I'm not a big fan of that. Okay, so here is the 50% of the imbalance that we saw in the 1 hour time frame. It came, we can see we formed like, we had a high, we slightly took it out, and then we tanked. So keeping this in mind, that we already had a reaction, so this region in itself becomes like a strong region for me to look at and see what's taking place. But the thing is, on the 15-minute time frame, this is equal highs, and naturally we know when it comes to equal highs, they're meant to be taken out. So I don't want to take a trade from like this candle forming here or whatever, because the point of that is for it to be taken out, and we know that's going to happen. So again, that's more going back to the order flow point. Now this region here is where I started to monitor my trade even more. So once this high was taken out, and now I know I can anticipate a nice drop to take place as soon as this high was taken out. So what I did was, and same thing that I went over yesterday, dropped down to 5-minute time frame and started breaking down each point. So you can see here, this is a distribution schematic taking place here. And you can see we have up to the LPS and then the second LPS phase taking place, the LPS1, LPS2. What do you think of? What do you look for in lower time frames? I'll get to that. It's the same stuff that everyone went over with you. When you have your higher time frame point of interest and you just start looking for the same thing to take place again in the lower time frames, because I believe on day 3 they cover the fractal nature of the market. Everything that happens on higher time frames happens in lower time frames. So look for that mitigation process, look for market structure, all of that kind of stuff. But you can see I had a distribution here, had a mitigation here, and that was a sell that I could have possibly caught. But that's not what you call it. That would have been an insignificant move in a sense. Then if you come here again, what the market started doing was it started forming equal highs and stuff like that again, and it started the distribution schematic again right here. Okay, you can see your buying climax ST, buying climax ST, UT, UTAD, and test. Now, look at this here. Drop down to 3 minutes. Okay, drop down to 3 minutes. You can see this as an equal high and a FU again. So the same thing taking place, and I can see that the market structure again on the 1 minute time frame, 3 minute time frame is low, high, high, low, high, 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 low. Let's see if we make a higher high. That's what we should be anticipating. What happens? No. Went too forward. We don't make a higher high. We fail to make a higher high. We take out this low. We make a lower low. Now, what's happened is the market has formed mitigation here. That's causing order flow to be bearish, and it broke structure, so structure became bearish as well. And that's when I started looking for my entry, and that was based off this candle here. Only because we have an imbalance right here. So take your entry off the imbalance and put your stop loss just above the imbalance. So you have like a 2.7 pip stop loss. On the 1 minute time frame, there's an imbalance inside here as well. So I won't be able to go down to this. I believe I showed on the 30-second time frame. There's an imbalance inside here. So just to factor that in, I'll put the stop loss above this point here. So instead of theoretically, I could have put it just here. Now, we identified a point of interest. We managed to figure out an entry. We managed to figure out a stop loss for the trade. Now we need to figure out some take profits. Now, let's go to 15-minute time frame and see what key structural points we can take out, or what key points we can, what are the important zones we can look out for. So just taking a look at 15-minute time frame, what's going on here is everything you can see market structure is bullish. None of the lows have been taken out. Instead, what we have here is what you call it, okay, the market wicked below this low, but even though it wicked below this low, it took out that high, so it made a higher high. It went back to being bullish. So I need to find relevant points of structure where I can target as take profits. Can you base your analysis on you can? What's the difference between distribution and consolidation? Distribution and accumulation both are consolidation phases. They're not trending phases. So when you talk about it that way, it's both the same thing. It's just in a distribution schematic, you're gearing up to go up. So that pattern of accumulation or distribution will take place in a consolidation range. Is there a psychological reason you use dark colors? No, I just like black and gray. What do you look for on lower time frames? Just went over that. We look exact same thing as higher time frames. Look for order blocks to mitigate, structure to break, stuff like that. Do you pay attention to time and price? Yes, but not strictly. I'll say if there's a big risk to reward trade and I feel like I'm going to miss out on it, if I wait for the correct time, if I wait for London New York crossover to happen, then I'll just take the trade instead. What is an order block? Order block is a candle in which there's a lot of orders stuck in, but usually a last buy before you sell, the last sell before you buy. What's the difference between market structure and order flow? Market structure is higher highs and higher lows. An order flow is mitigation. So, for example, you had a FU candle or a buy before you sell, you tapped into it and you drop. You had another buy before you sell, you tapped into it and you drop. Another buy before you sell, tap into it and drop. Then you can say you got bearish order flow. You're gradually mitigating lower and lower. And structure is just lower highs, higher highs, or all of that kind of stuff. But the advantage of identifying order flow is usually before market structure breaks, before you have a break of structure, you have a change in order flow. You'll see mitigation taking place to the downside instead of to the upside. If I'm awake, as in, not if I'm awake, but if I feel like the trade's going to trigger whilst I'm awake, I'll try to use alert system and market executions. But if it's what you call if it's, what's the word for it? If it's going to be at a time where I'm going to be busy or I won't be able to pay attention, then I'll just set a limit for it. Only because sometimes waiting for the price action on the M1 that takes place when it comes to your entry will allow you to get a lot higher risk to reward. But also sometimes, okay, I'll go over that one as well. Sometimes what happens is, I forgot what I was talking about. I lost my train of thoughts. How do you know if an order block is valid? Well, me personally, I like to look for one thing. I like to see if that order block, what you call a broke structure, as in, I'll show you an example of it now. So see here, this buy before you sell, what's the best time frame to enter off? Any time frame, any time frame. I feel, okay, with this I'm gonna have to show on a different chart. What I was talking about, how to identify a proper order block. But essentially, this, what you call it, yeah, this candle here, what you call it, led to that drop here, and that was what you call it, the low being taken out. So because this candle led to a break of structure, this candle we can anticipate a reaction to come from within this range. And you can see here it made an equal high, so the reaction came from the top of that range. If you look at this last sell before you buy candle here, this last sell before you buy candle led into the move that took out the high here. Okay. Now, if you break it down in terms of particular retracements, then if I place a fib from here to here, you can see that wasn't a 50%. That didn't pull back more than 50%. So I'll just see this as a correction move instead of just as a correction instead of actual pullback. So the next time I do my fibs, instead of stretching from here to here, I'll stretch my fib all the way down from here. So that's what I mean is it's a correction, but it's not an actual pullback, because it will determine the next time where I pull my fibs, where I'll pull them from. That makes sense. I don't really have much of a routine. I don't sleep much, to be honest, but what do you call it? I'll try to wake up around 7:30 for London, and then keep that. I'll stay up till probably around 9 a.m. and then I'll go sleep again till like 11, 12. Get up in New York, and that's the only two things that I do differently. I believe I covered the majority of the questions, so I'm just going to carry on with the analysis analysis that we're doing. So we identified our entry, we identified our SL. Now we need to identify reasonable targets. Well, first thing, we know these lows are going to get cleared out. Now, you can, when you're entering your trade, I know some people enter multiple positions. Sometimes you're going to enter one big ass position and then take partials throughout. So it's up to you how you want to do it. I prefer to do multiple positions, but I prefer to do multiple positions, each with a set TP at a possible reversal point. Now the 15-minute time frame, I know if we cleared equal highs and if this is a true order block, we need to break real structure. So we'll have to take out this low point here. Now, if we take out this low point here, where will we get to? Well, I can see if I drop down to the 5-minute time frame, I can see that I got imbalances around this area here. So if you break this low, the next point that I can react from is probably around this area here to form a pullback for that buy. Keep that in mind. Also, I'll keep in mind is if this is a low, high, higher, low, higher, high, then this point shouldn't be taken out. So I'll keep this point marked out here as well. Because if we take out these lows here, if you take out this point of interest and nowhere else for it to be gravitated towards unless it's below this point, it's going to come crashing down. So keep an eye on this region here. There's just 2 points that I'm going to monitor. Now, just see what the risk to reward is like to each position. Well, from up to here, it's only a 1 to 5. Can't say I'm the biggest fan of that. Up to here is a 1 to 10. So it becomes reasonable. Okay, this becomes a reasonable point for me to have my first TP and close out my first position. Sorry with the comment button. Wow, it's a lot of questions. I'll go for everything at the end. Let me at least finish like 2-3 examples of combining high time frame and low time frame together. Just top-down analysis. And then I can if you want a second TP, you can make us another a 1 hour point of interest like that. But me personally, I'll start having my swing targets as well. What I think reasonable swing points for it to take out. Well, if I was to look at this as in terms of 4-hour structure, I can see low, high, higher, low, higher, high, higher, low. Naturally higher, high, but it could retrace and not break this low and go up to make a higher, high as well. So it'll still be bullish structure without it being bullish. So I can look at these regions here, taking profit at this low here, and then I know this equal low needs to be violated as well. So I can stretch this position all the way to here in the long run. Now go back to 15 and let's watch this play out and what started happening. Because there's one thing as well, so very important, you need to be adaptive to the markets. Like you can't just have one bias and that bias doesn't change as time goes. Every single move that the market makes should have a effect, should make you think, should I continue looking at it this way or should I start looking at it a different way? Should be running through your mind 24/7. Now let's see, we get a reaction here, we get a drop. You can see once we come to this point here that we marked on the 5-minute time frame, where you'd naturally anticipate the low to be respected. You got a reaction here, it pulled back, but then it continued to drop. But seeing this reaction here would have been a sign for you to break even, because this move here could be sustained enough to take your high out. So this is why I monitor this point here to see, do I need to break even to become safe on my position? Let's continue watching what happens. We take out this point here as well. Okay, now in terms of structure, I can see on, what is it? From 4 hours. 4-hour structure is still maintained. We can't say that we turned bearish on that, but at least on 15-minute, the key structural point that we had marked out here, that's been taken out. Okay, let's continue watching. And now this trade is like a 1 to 10, 1 to 15. Now, my next point of monitoring comes to this point here. So start looking what's happening in the market here. And this is the setup that we went over on Thursday's call, yesterday's call. Oh, why is it not letting me pause? This way like that. Okay, this point here. Now, this reaction came and it was a sustained reaction. It came in, filled in this imbalance, but most likely reacted from a 30-minute buy before you sell. Because 30 minutes was the time frame. It filled in the imbalance and it reacted from sell before you buy, from within this candle here. But again, every single point you need to monitor your position. So look what happened when we reached here. Look at how the price action started playing out. So we're in a point of interest, right? We're already in a point of interest and the market started coming down to this point of interest. Look what it started doing on the M1. It started to accumulate. So this is the stuff that we look for. We have a selling climax, we have a ST, we have a ST in phase B, we have a spring, you can say we have a test of a spring. We've got our first LPS phase happening here. If we were to mark these out in terms of lows and highs, high, low, lower high, lower low, lower high, equal low, lower high, lower low, lower high, lower low, higher high. So structure on this has broken bullish as well. Now, let's see. Eduardo. Nah, can't get them on. Okay, I believe the entry that I got was from this candle here, and we're going to break it down now. So we had our accumulation phase playing out. We had our break of structure as well. So naturally, the next point that we'll look for is where we can have imbalances. Now, I think the imbalance was only valid on like a 15-second time frame. Let me go down. Oh, probably something lower. Yeah, and this is how crazy the market is. You can see exactly where it came. It came specifically to this candle to fill in something even on the 5-second time frame. Now, the last sell before you buy candle that we're going to look for in this area here, well, the last sell before you buy candle that I can see is this one here. So this area becomes my new point of interest where I can start looking for buying opportunities to hedge my sell position. And the reason why we're looking to hedge our sell position is simply now we're at a point of interest where we can potentially look to start buying from, and we're in a sell that's already sustainable and it's in quite a lot of profit. So we can leverage the profit that we have from this sell into this buy here. And this is where, whichever way the market starts exploding after that, it becomes a win-win situation for you. So this now, I start looking at, because I broke structure on the 15-minute bearish, so I want to see what's the possible reaction points or where I don't want this to go beyond. So if I got multiple positions here, I can see that this is the M15 buy before you sell candle. This is where I can start looking to take some profit. And let me drop down to 4 hours, 1 second. I see on the 4 hour, there was this imbalance here, which it comes to fill in right here, comes to fill that in. Boom. And then you have the second reaction here. Now, if I go back here, go to 5. You can start monitoring when the market comes to this point of interest that you have. You can start monitoring for secondary sell opportunities here. And then let's see how it comes. Let it reach our zone. Okay, watch again how the price action plays out once you reach this point here. So this is a 4-hour imbalance fill, and it's in accordance with our 15-minute market structure. You can see we've got way more than a 50% retracement. So let's just see how price plays out when we enter this zone. I can see already, let's see we had sharp moves, and then every single move started to get progressively smaller. Again, the buyers are leaving, the market momentum is dying out. Just take a quick look at this on the M1 and you can see already the distribution schematic that's going to play out here. And literally, if this was, if we were to mark this out from here, buying climax, ST, UT, UTAD, and then you can just wait for a structural break here, we had a low, high, low, low, but that low, low took out this 5-minute bullish structure that we had here. Okay, so now that we got a break of structure, we can start looking for entries again to enter our sell, because order flow and structure have both become bearish, because the 5-minute structure has been taken out, the 1 minute is making gradual low lows and low highs. And that, at this point here where the structure was taken out, the most obvious point becomes this imbalance here, and you can get yourself secured in a second position like this. And targeting. Now this trade ended up failing at the end, but before it failed and before it actually took me out, between both the positions it gave me around a 1 to 15, and this was also around where is this? Around 1 to 15 plus when it did play out. So how much did it give me? Yeah, it gave me a 1 to 12. So even though the trade ended up failing, me personally, when I get to somewhere like 1 to 10, it's a place where I reasonably look to break even or take some partials. And again, when it comes to this position, again, when it came to around 1 to 10, I started naturally looking to take partials, break even and risk free the position. I'm gonna, if you give me 1 second, then I'll start going through some of the questions. Yeah, but the purpose of showing this specific trade was one thing that I want to stress yesterday. Most of the times when you guys look at social media and stuff, you see every single trade looks like a winning trade, but that's not the case. Some trades will give you crazy risk reward, will miss your target by a couple of pips and fully reverse on you. Some positions will, take you out before you even think that you've been triggered in, especially if you're trying to use tight stop losses like this. If you don't, factor your spread in, then within seconds, like you're activated, you're taken out and the trade's in profit, but you've been taken out. This stuff happens in real life. It's not as, glorious as everyone shows it. But again, this opportunity here is one that I had my eye on, but I missed. I didn't manage to get in. But these are the 3 positions that go into this week on EuroCAD. But yeah, coming up to this point here, take a look at this. We had a high, we had a low, we had a lower high here. This was more than a 50% retracement. So on the M15, this becomes our lower high to look at. Do we make a lower low? We don't. We reverse, we make a higher high. Okay, so which was the last sell candle that led to the break in structure? This was the last sell before you buy candle that led to the break in structure. So this is our order block, okay? We don't class this one as our order block here. We count this one as our order block. This last sell before you buy didn't lead to a break in structure. Same with this one. It didn't lead to a break in structure, but what did this one do? It led to a break in structure. So this point becomes our point of interest again. And naturally going off this candle, but we can see that slight imbalance there. If you factor that in, you would have managed to get yourself a position like this, very tight. So, and now you've got yourself 2 hedges. You've got yourself 2 sell positions, 2 buy positions. Actually, one of the sell positions have already been taken out. Whichever direction the market goes, is a win-win for you. And it blasted through upwards. Naturally, TP, one place you'd look at it, because it's the M15 structure you're playing off, would be to take some profit at the highs here. If you want to get this liquidity here, if you look at this on a slightly higher time frame, instead of a distribution, it's more relative equal highs. So this, you can anticipate all of this to be punched above and have more TPs here. Okay. Let's go through these questions. Okay. How do you identify if an imbalance is valid? Every imbalance is valid. Every single imbalance needs to be filled in. So I won't say there's a method of identifying whether an imbalance is valid or not. But one thing you can use for confluence is seeing if the imbalance is there on multiple time frames. So if you look at 5 minutes, 15 minutes, half an hour time frame, and the imbalance is still there, it'll be more stronger than just one that's there on one singular time frame. What are complex pullbacks? Complex pullbacks are basically a trend within a trend. So it's basically, again, looking at the story of the market. I think EURUSD has a good example of this. No, it's not this one. Actually, let me see, where is November 2019? This region here. This is an example I can remember from my head. It dropped down to 4-hour time frame. Look at this. The trend is bearish, yeah? We've got our lower highs, lower lows, lower highs, lower lows. Okay, taking place all the way from up there. We've got a bearish trend. Now, when you see these pullback moves happening, each and every single one, what you see is a trend. So if I was to look at this on the 1-hour time frame, this would be my trend, right? 0, 1, 2, 3, 4, 5. I got an uptrend here. So it's just correlating all of the time frames to work out whether the trend that you're in now or the trend that you're looking at in the time frame now is a part of something larger, is a part of a larger impulse, is a part of a larger pullback. So are these higher highs and higher lows taking place to clear the next high, or is it taking place to, what's the word for it, lead into an impulse? Now, the advantage of knowing this is two things. First of all, when you're trading within a complex pullback, you'll know that this high shouldn't be taken out. So you won't be wasting your time trying to hold a trade all the way till up to the next high being taken out, because that's not the purpose of the trend. The trend that's taking place on the 1-hour time frame is only taking place to fulfill the pullback of the 4-hour time frame. So that's the advantage that it plays. And also, when it comes to having your take profits, in the scenario, if I was buying here, then it would be reasonable for me to look for take profits at sell mitigation points instead of anticipating them to be blown out. Because if you're expecting a shift in larger structure trend, then naturally every single sell before you buy point, every single sell entry here, you won't be looking at, because you anticipate all of them to be blown past. But because you don't anticipate the high to be taken out, you can pay more, to focus more on the sell position. These sell positions you should be scaling into the lower time frames for. What is the order flow? So we went to just mention this, but order flow is the gradual step of mitigation. So normally you'll see, before you see a structure break, so okay, let's look at this example here. You can see this low was taken out, yeah? This low was taken out here. But before this low was taken out, if you inspect what happened here, I believe we'll have to drop to very low time frames for this. Let's take a look at 1 hour. You can see the first thing that we had on the 1-hour time frame was a mitigation of this order block here, right? We had that mitigation here. And then we formed this low point here. It came in potentially on 15-minute time frame. We mitigated this last buy before you sell. Okay, we mitigated this candle here. And then even this point here, okay, it cleared out the liquidity from this high here, but it still mitigated something from here. And then looking at this, we got this candle, even on the M5. Where's it gone? Oh, it's not going to let me go that far back. Okay, but even on the M5, it was letting me mitigate. So if you're seeing mitigation taking place in the opposite direction continuously, then that's a good sign that market structure is going to be break. And that's one thing that I personally use if sometimes like you see me swinging a trade for a couple of months at a time, or I haven't done a couple of months here, but I've done 2 months. But catching the move from the first impulse, it's very easy to catch a move from the second, but to catch a move from the first impulse, that'll be the first lookout sign, first warning sign that a move that big is about to take place. How do you know which one is the right mitigation to play off. I don't know which point you're on about, but they're always to do with structure. What is like the most sensible structural point to play off? Here, this 4-hour imbalance was mitigated here, but you can see what you call a 4-hour, 1-hour structure was taken out, and that became the confluence point between them all. Let's see the 1-hour imbalance right here, because the 1-hour structure was taken out here. This is what relates to a question someone asked as well. I don't like looking at wicks as a break of structure. So this on the 4-hour time frame, because it only wicked through on the 4-hour time frame, I still see myself bullish. But on the 1-hour and 2-hour time frame, because we actually took out this low with a full body candle, on these time frames I'll see myself bearish. But it gives strength to my story. Like on the 4-hour, we are still looking for buys, and just because this low has been taken out, it doesn't mean we should disregard our 4-hour points of interest, because on the 4-hour time frame, that low was taken out by only a wick. Okay, but yeah, 1-hour structure was broken. I used a 1-hour point of interest, and inside that point of interest, I started looking for what you call the smaller time frame stuff, and that's where it's for that accumulate distribution taking place. That makes sense. Your favorite? I'll just say the trade house law. How do you know if an order block is valid? That's where you mentioned that buy before you sell candle is the buy before you sell candle that took out the structural point. It cleared a higher high or it cleared a lower low, and that's what will make it a valid thingy order block. What's the best time frame to enter? Any time frame? What time do you analyze it? And I do majority of my charts on Sunday, and then I set alerts throughout the rest of the week. Price points at key levels or reversal zones, and as the alerts get ticked off, I start looking at that specific chart in more detail. What's your favorite educators on IM? And do you watch them particularly regularly? I haven't used Go Live in a minute. But I'll say the trade house law. How do you deal with back-to-back losses? Okay, that's quite an important one. You should first of all have a psychological cut-off point for yourself in your trading. Something like a percentage that you're very uncomfortable to lose. So if it's like for example, 5% is your cutoff point. So if you lost 5% back-to-back in a week, then that means it's your time to take a break from the chart and hit the drawing board again and see where you're going wrong. Reanalyze your strategies. Start looking more deep into it. See why you're taking back-to-back losses as well. What's the common denominator between the last 5 losing trades that happened? Say another thing is have a optimistic mindset, not pessimistic. So I feel like one of the biggest reasons why people have back-to-back losses is the first loss puts them down, and the second trade that they enter a bit more humbled, but because they've been knocked down once, but they kind of get off guard because you want to make that loss back. And the third one, it stings you a bit more. You want to make it back a bit more. Fourth one, so you just need to trade with no emotion. Don't get gassed over a win. Don't cry over a loss. If you get too gassed over wins, you'll get too confident. You'll start missing out points in your confirmation checklist. You'll take a trade that only has 2 or 4 confirmations for you. And if you get too upset, then you'll be too scared to take the next trade. And you'll start missing the really good ones because you're just too scared to take them. What's the biggest lesson you have learned from a loss? Don't listen to anyone else's opinion. My 5 biggest losses, I'd say 5 of them at least, maybe even more than that, but majority of the biggest L's I've ever taken have been from following someone else's analysis. Follow your own. And if you are looking to take someone else's analysis, don't take it blindly. Make sure it matches your criteria as well. When it hits your point of interest, do you continue to enter the market or do you wait for something specific to happen? When it enters my point of interest, that's where I start looking for my schematics now. This is one thing I went over Thursday as well. When you go to lower time frame, you don't go to lower time frame on the left, you go to lower time frame on the right. So let me explain what I mean by this. When you're analyzing lower time frames, you don't start looking for, let's just say, I'm going to delete everything. Let's just say the market is like this, okay? Or actually, even better, cut this off. This is where the market is right now. A lot of people try to go into the 1 minute inside this area here to find out the smallest imbalance that have been left unmitigated, whatever. Me personally, I like to keep my point of interest in a higher time frame. I like to keep my point of interest in a higher time frame, and I start looking to see what to call it, the lower time frame as the market enters my higher time frame. So when the market entered here, that's where I start looking at my 1 minute, 5 minute, 15 minute, whatever. Here, if you break this down to the 1 minute time frame, what's going to happen is you're going to see an imbalance here, imbalance here, imbalance here, buy before you sell here, sell before you buy here, and an FE candle there. You're going to have so many points of interest, you're going to confuse yourself. So you'd rather just chill here and just wait to see what reactions come in. 1 second, let me put my laptop on charge. Yeah. Where's the chat box gone? What is the biggest lesson of result? When it hits your POI, do you continue? I just went over that. Is there multiple POIs such as imbalance and odds in the same area? Which are the best to use? I have a rule when it comes to like that kind of stuff. FE candle will get the most priority, and then buy before you sell, sell before you buy, and then imbalance. So that's my order of priority. If I see them three back to back next to each other, then I'll prefer to use the FU over the imbalance. What's the best RR you have achieved so far in your journey? It's close to 1 to 300 now. It's the gold one on our Instagrams. What is the approach of a new beginner should take to keep in mind? Sorry, but they're coming in bulk now. What is the approach a new beginner should take and keep in mind? I'm not sure what you mean by that. Should take and keep in mind. I'd say focus on becoming an analyst before trying to become a trader. If you follow the skill set, then the money will follow. Money will come. If you try chasing the money, you're gonna neglect the skill set. So before anything else, try to become a good analyst, and then look to become a good trader. And not every good analyst is a good trader. You'll see people that will send out charts 24/7, and every single chart is what you call it, playing out. But if you look at the actual MT4 account, then hella drawdown or what you call it, they're not in profit. And the reason behind that is you become a trader once your psychology changes. You're an analyst, that's all you are until your psychology gets on point. But once your psychology is on point, that's when you become an actual trader. Because you can have 1 to 20, 1 to 20, 1 to 20. You got 3 1 to 20s back to back. You as a trader, you can't even get like gas that you got 3 1 to 20s back to back. Because what happens is you start doing this crazy maths in your head, thinking that I risked 1%, I got 20. I risked 1%, I got 20. And if I risked 5%, I could have done 100. If I risked 10%, I could have done 200. If I risked 20%, I could have done 400% gain on that 1 to 20 trade. And what happens is by the time you're on your 4th or 5th trade, you're risking your whole account in your positions. And that's the truth with so many people. Like I've seen it happen to even some of the most famous traders you guys know. They had like 6 months where they were just on a crazy winning streak, and then after that, boom, they lose all of the profits. What are your fib levels? I only focus on one primarily, which is the 50%. Not that I take trades off it, I just like to see has the market gone past it, just so that I can confirm that do I have a retracement or a pullback. What's the reason for your fib levels? That's exactly what it is. How many pairs do you look at and how much time do you spend on the charts? Well, I look at all majors and minors. I don't really look at exotics. My main focus is majors and minors, so all USD pairs and GBP, Chef, CAD, JPY, NZD and AED pairs. Sir, can you please label a wipeout schematic? Okay, where did one take place? Okay, I got one in mind. I'll go over that in a second. As you have been trading for some time, what you say are your key attributes amongst everyone's different. Everyone's different. Different people bring different things to the table. But probably patience is the most important thing. Do you use volume for confluence? Never. Never ever use volume for confidence. Okay. Do you take any profits before high RR targets? Of course, all the time. By the time I'm 1 to 10, I've definitely taken some kind of volume off the table. Now, it depends from trade to trade, what the potential I see in the position. But I'll always take something off the table. And actually, I think this is worth mentioning as well. When I say I break even on a trade, I break even very differently. Now, you see, just say I got market structure taking place like this. Got my high, got my low, got my lower high, lower low, lower high. Okay. Now I enter a position here and I have like a 3-pip stop loss. Enter a position here, I have a very tight stop loss. Now what tends to happen is by the time I've reached my 1 to 10 RR, I still haven't broken structure here. I haven't taken out the low, which means there's still chances I can pull back and come and take out this high. I might not have even reached 50% of this impulse down, 50% retracement of this, so I'm not even in a premium zone to that the market can continue tanking. Now, what I tend to do is if I hit, for example, 1 to 10, that's significant profit for me. It's something that I'm happy with. Instead of bringing my stop loss to break even, what I tend to do is I take at 1 to 10, I'll take off 10% volume. So if I risked £100 and now I'm floating £1,000, I'll take, without bringing my stop loss to break even, I'll secure £100 worth of profit. Now, what that allows me to do is, until this low has been taken out, it allows to give me breathing space. So if the market does return to come here and form equal highs or something like that, I'll still be safe in the trade. But if it does go to my stop loss, then I secured £100 here, I lost £100 there, so I'm technically break even in terms of money. So I might not be break even in terms of stop loss, but I'm break even in terms of my risk on the trade. Okay, how do you know it's not a redistribution when it starts accumulation after the impulse down? This is where waves come into play. Okay, this is where Elliott waves come into play. So if I had this as my first wave, where it's my 0, 1, 2, 3, 4, 5, then I'd anticipate my accumulation to take place here. This would be my accumulation. At these impulses, pullbacks here, I'd expect my reaccumulation to take place. Where's the box gone? And after my fifth move, I'll anticipate my distribution to take place. Now, every single trade that you have, you break down in this sense. Now, inside here, if I'm having a reaccumulation here, how do I know whether it's a reaccumulation or a distribution? Well, if this was on the 4-hour time frame, then have a look at the same structure on the 5-minute, 15-minute time frame. See what point of the wave are you in, or what point of market structure are you in. Then you'll know, because the secret between accumulation and a reaccumulation, or a distribution and redistribution, is literally a reaccumulation. The first half looks like a distribution, then it's an accumulation. And a redistribution, the first half looks like a accumulation schematic, accumulation schematic, and the next half looks like a distribution schematic. And then it'll confuse you because the initial first half looking like an accumulation will make you look for buys. But identifying where there's at this point, so before the 0 and after the 5, you'll want to, the main accumulation distribution, and at point 2 and 4, you'll anticipate your redistribution and reaccumulation, and it's vice versa for a downtrend. How do you monitorize your position in terms of how many times, when do you look at them? If I'm looking at a swing trade, then my personal method of swing trading is I open up a whole new account for the swing trade, and I'll enter my position, I'll delete the account, and I'll only put my risk into the account. So if for example, if it's a big position and I want to risk £100 in that position, then I'll make a £100 account, and with no stop loss, I'll put the trade in at my entry, but with no stop loss, just to keep the margin running, and I'll delete the account on my phone. I'll monitor on TradingView. And when it comes to intraday positions and stuff like that, then I have my alert system. So on TradingView, at every single point, I'll put my alert, and as it goes off, I'll be like, okay, now I need to monitor this position. So I'll open my MT4 or I'll open my TradingView and continue checking it. Which currency pairs do you tend to look at? All majors and minors. How how would I know which imbalance to use when there is more than one? I tend to take the highest one. I always tend to take the highest one. But if it's an imbalance inside, for example, if it's a 1 minute imbalance inside a 3 minute FE candle, then I'll do something like I'll measure out the 50% of the FE candle as well, and measure out the open close 50% of the imbalance, put a line on all of them, and the point that has the most confluences, like this point is the 50% of a 3 minute FE candle, but also the close of a 1 minute imbalance. I'll prefer to use that point where it's got like something from 2 time frames. Do you only be after 1 to 10? No, it just depends. If it's like something like a 1 to 20 trade, then I'll look to be after 1 to 6, 1 to 7. I won't even wait for 1 to 10. 1 to 10 is for like high swings. How do you trade your SL? Personally, I actually don't use a trailing stop anymore. I used to use it before, and I used to keep it 50 pips behind. But as I started trading this way, I don't use a trailing stop anymore. I just put my stop loss 5 pips in profit once I've gone like 1 to something crazy. Then I just put my stop loss 5 pips in profit at most, but normally just 2 pips. But what I do instead is I close off volume as we go to certain points. Trading stop loss is basically to catch the rest of your move when the market starts falling, but I don't need to worry about trading stops because I'm removing volume all the time. If you are trading on such low time frame with such low time frame trades, are you constantly buying and selling? No, you only look at the lower time frame inside a higher time frame. So if I'm really looking at a 4-hour swing, but I'm just trying to get my entry of the 1 minute time frame. Can you go over how you look at structure? I think we just covered that. Should we do a part 2 for rest of the questions tomorrow? I'm quite busy tomorrow. I've got some visitors coming over. Indirect to the time we both had different POIs and both got reactions. Yeah, that happens multiple times. I'm not forwarding questions which are answered already. What are the key things we look to identify in a schematic? Actually, this is one that I think a lot of people struggle on. My personal thing when it comes to schematics is I don't bother looking for, let me find accumulation. Okay, I don't bother looking for any of the high points in accumulation or any of the low points in the distribution. All I care about is the rounding off of the market, in general rounding off. So in accumulation, all I care about is there a selling climax, ST in phase B and a spring? That's all I care. And after the spring, I'll look for the test. Okay, I won't bother about the PSY and AR and the SOS. I don't really focus on any of that. Same thing in the distribution. I don't focus on AR, SOW, PSY. The only thing I focus on is buying climax, UT, UTAD. But they're the only things I focus on. When it comes to actually marking out accumulation, distribution, whatever, then one key thing I try to do is I trade the test. I never trade the spring. I always trade the test. And the spring, I like the spring always coming into a point of interest. So whilst the spring is forming, it's mitigating like a FU candle or it's mitigating an order block, something like that. If that happens, then I look to enter the test. If that doesn't happen, then that means there's points of interest that are still left untapped into on a higher time frame. What percentage do you risk per trade? I personally do around 0.25. Okay, I'll do that around that first half. Yeah. How do you account news? I don't look at news at all. I completely stopped a very long time ago. I actually bit me in the back on, I believe it was, actually, that wasn't news related. That wasn't really even news related. That was more when the CAD JPY candles happened. It went like 20 pips beyond my stop loss. But I believe the news is a mask for manipulation, as they say in the trade house, mask for manipulation. So it's there just to cover up for institutional news happening. Do you use demand and supply zone? Yeah, I do. So my demand and supply zones are my higher time frame points of interest. What's the difference between order blocks and breaker blocks? Breaker blocks, the market breaks through them and it comes back to it. So it's like a break and retest of a zone. I'm a beginner, just started last week. What is the best product to use? I'm not sure, bro. Ask your upline. Why are two of your fibs green? Do you expect? And no, it's just the color scheme I like. For break of structure, do price need to close above the previous or just wick enough? I like to see a full body close. I like to see full body. I don't like wick play. Can you put your confirmation check on the screen? Yes, I'll do that now. PA stands for price action. HTF is higher time frame, point of interest. LTF, lower time frame, price action. That's it. They're my main confirmations. I would just like to tie in every single time frame, see the story on every single time frame. If that's all of the questions, then should we call it a day? Is there more questions? You know what, open up the chat box and I'll just pick 3-4 random ones and then we'll be done. I believe order flow is the new term everyone is using for order blocks, so it's the same thing. Show an example. Can you show an example of supply and demand? Okay, cool. Can you show example? Good. The full time frame for that doesn't load up anymore. Seasonality, I'm not a big believer in seasonality. How often do you find setups weekly? I believe when I'm marking up a Sunday, I feel like I got 10 setups, 15 setups, but as the week comes and you're following the lower time frame what's happening, you'll only end up entering 3-4 trades. Can you do another top down? Okay, I'll do one more. What is a momentum trend? What is a momentum trend line? That's information that can't be released. Can you do another top down? What is for? Do you approach gold differently? No, I appreciate. I look at gold the same. The only thing I change differently is when I have my order block. Instead of expecting a 50% reaction, gold tends to wick through a lot, so I look at like 80% of the order block instead of 50%. Where can I learn the two together? They're two completely separate concepts, Elliott wave and Wyckoff, so you just have to overlap them. But like I said, after every pullback, that's where you anticipate reaccumulation and distribution. What time frame do you analyze? Always from monthly down. Always from the monthly down. I'll do one more top down and hopefully that will cover a lot of the examples. I'm going to go over the Euro USD trade on my Telegram. Only because it has majority of the stuff we look for. Okay, so this is around where I started analyzing the market. I started looking at it around 2 weeks before the trade happened. But I started like having my feelers out there. I'm bullish on Euro USD. Let me see how it's gonna play out and I started monitoring it. So starting off from the monthly on Euro USD around this region here, what I can see is structurally we were bearish. We had a high, low, low, high, low, 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 high, low, low. But once we come here, what happened was, okay, we never had like a pullback, a meaningful pullback until this region here. But what I could see is we made monthly equal lows and we cleared the liquidity of these equal lows. We had a FU candle below these equal lows. Or you can start even marking this as a selling climax, ST, STB, and a spring. Now this came to the open of this imbalance. It didn't fill it in or anything. It reacted off. Now, the main thing that got me interested is how fast it reacted off. The fact that when it caused this reaction, it started a 2-year bull run. Yeah, 1.5-year bull run it started. Based off this vertical FU taking place of these lows. And that confirmed this as a FU for me. Now again, another thing I can see on the monthly is we come and we tapped off this last sell before you buy candle here. So now I'm interested in the bullish potential of this. I know that in trending wise we're bearish and this low can be taken out, but that's just on the monthly. Now when I go down to the lower time frame, I'm going to start justifying every single point. So from monthly, when you go down to weekly, then we can see that we have this gap here and we just filled in this gap. Okay, we filled in this gap and we tapped into this imbalance here. Yeah, we closed off this imbalance here on the weekly. So again, weekly we done very nice mitigation, and if you look at the imbalance, you tap into it and then you have this very, very bullish weekly candle. So it shows strength in this imbalance. It caused a very sharp reaction. Now let's jump down to daily, see what's happening on daily. Well, in terms of structure, we were bearish, and then once we came into this region here, we had indecision. We had highs being taken out. We made a higher high and a lower low. So obviously in a bullish structure, you want higher highs and higher lows. Bearish structure, you want lower highs and lower lows. Here we have both. So we don't really have any structure to go off on the daily time frame. But what we do have to go off is the fact that we filled in this gap. So we don't have this gap on the weekly and the imbalance we marked on the weekly. So we might not have, what's the word for it? We might not have structure, but we have order flow. Jump down to 4 hours from here, and let's take a look at what's happening in the market. Well, I can see that we made a high, we made a, what's called a high, low, lower high. Now, naturally, we'd anticipate a lower low to be made here, but we started reacting. We started losing momentum in this swing down, where it started retracing and what's called consolidating in this region here. So now this made me start monitoring this price action, see what's going on. So on the 4 hour time frame, I can see that again, we started accumulating again. Now, this is what I mean by I want to see the spring come into a point of interest. Once we break this candle down, I'll break this down. But once we look at this region here, we can see we have, you can say our selling climax, our ST, both of them forming relative equal lows, and then that being taken out by a STB and a spring. And now naturally we'd want to see a test and all of that take place. So test will take place at this imbalance here. Okay. Now looking at this candle that I reacted from now, hopefully it loads up. I'm not sure if it loads up the time frame, but let's see if we can get it. Boom. This 1 hour last sell before you buy, it came, tapped into this, reacted off. Now we had multiple points of interest here. Is it going to come to fill in this imbalance, the 50% of it, the fill of it, the open of it, the 50% of this? So I measured out this whole range and took the entry based off the median. Sorry, I had the point of interest based off the median. So the highest and the lowest, I just put down, took the midpoint. Now going back to 4 hours where we were. Okay, we had this spring take place. We had these equal lows in a sense being taken out. We had our accumulation taking place. So this becomes in a sense FU candle of these lows here, or all of these lows here FU'd, and it becomes the spring of this as well. So you want to see this getting mitigated. So again, we start watching. One thing I'd like you guys to keep in mind, every time you mitigate, you can drop a time frame. So you see you had a mitigation here, and this was a 4 hour time frame mitigation. Now we can look for 1 hour time frame when the market reaches this point here. If you get a mitigation here, we look at 15 minutes, and that's what you're just doing. You're zooming in every single time you bump into a zone. essentially. So we wanted to see price action as it comes into this 4-hour point of interest. I'll take a look at this. We come into this 4-hour point of interest. Let's go down to 15-minute for this. What can you see we're doing again? You can see we have relative lows that we take out here. We start a larger accumulation, and within that large accumulation, we start this smaller accumulation. Selling climax ST, STB, spring. Selling climax ST, STB, spring, right? Test. Now we have M15 imbalance here that we can anticipate to get filled in. Okay, it took a while for the market to come back to all the way down here to fill it in, but this is one thing, it shows you the power of these zones as well, after how long the market can come back to it. This was the date here, let me get the date here. That was the 7th of May, and now we're coming up to the 11th, so it's been 4 days for a 15-minute imbalance to get filled in, and that whole time we did distribution wherever here, causing a lot of confusion. You can see at one point we came very close to it, we missed it. Look what happens. Here we are. After 7 days, so after a whole week, we come back into this region here. Now I've got the 15-minute mitigation, I can start looking for even smaller time frames. I start looking at what's taking place on M5, what's taking place on, M1. But just dropping down from natural drop down from M15 is M5. If you look at this, we have these high, low, low, high, low, low. Now we had a high, high. But this becomes the point that broke in structure, so we can look for the mitigation of this. But to me personally, my personal entry was based off the 15. I didn't bother refining it anymore. The only reason was because I'm looking at a monthly time frame trade and I already have a 7 pip SL. My SL is between these 2 points here. Now I'm going to be cautious of one thing. These can be looked at as, even though that's a lower low, these are relative equal lows. So I'm going to keep in mind that these lows can get blown out anytime in the future. Like, you have to just keep these things in mind. But I also know I had a breakup structure. I have this high being taken out. I'll play this on. There you go. That's the 15-minute entry that it gave us. And then this imbalance that we had, we said, remember the last sell that led to a breaking structure. So this one here, it didn't lead to a breaking structure. This ain't our order block. That's why it got blown through. Actually, this is a really good example. This sell didn't lead to a breaking structure, okay? So taking this sell before you buy as an order block will be wrong. If you placed your SL below this low here, you'd have been taken out. You'd been wicked out of your SL. But this sell before you buy here led to this high being taken out, so it led to a breaking structure. So this sell before you buy here becomes an actual order block, something that you can look at. And you see entry based off here, if you took the, there's a M1 imbalance, you can slightly see this little imbalance here. If you took that imbalance and took the SL below that candle here, you have the 7.2 pip SL. If you want to refine it even more by going down to 2-3 minute, then you can see this slight point here with that little imbalances, you get to knock off like another pip of your SL if you wanted to. But now, again, we got our entry, now let's get our targets. Now, going back to the structure point here, we had this accumulation play out here. This was the 4-hour accumulation that we were playing. So all of these were just rounds of accumulations inside each other. But this 4-hour one that we played here, we can see this was our structural point, right? We broke it here, okay? 1 hour time frame, that's a proper candle. As you can see here, we broke structure here. So we can anticipate the next high to form and this to be cleared out. If it clears this out, where's my point of interest for it to sell from beyond before the just after this? Well, there's no imbalance or anything here, but I can see this imbalance here. So I can target this. This becomes a natural target for me. And this is because it's a large time frame trade. I know the refinance is done on a smaller time frame. In a scenario like this can literally be a TP1 because this has to be taken out. You're accumulating on a 4-hour time frame, so you want to take out the 4-hour structure. Jump on daily. I can see I have what to call it. Beyond these points, I've got all of these imbalances up here that I need to fill in. Got this OB to mitigate. If you go on weekly, then what you call it? If we are to make a weekly higher high, then it'll be to take out this high point here. I'm just going to put a line here. You can target all of these points. Now this, it didn't reach my third TP, but it reached every other point besides that. No, actually it did. It blew past all of this. Let's see how it played out over the coming days. I'm still holding this. I still got some volume from all the way down here. There's many examples of where it gave re-entry opportunities in this region here. This actually, if you back this system inside here on the 30-minute time frame or the 15-minute time frame, you find a good reaccumulation. That's example of one of the big trades that I had. Was it played out to like 1 to 100 plus when it reached here, but what's it called? Final target is like 1 to 120. Do you use quarter levels? No, I never use everything from this chart. That's not possible, but I ain't repeating everything. Who is Eduardo? Actually, this call has gone on for like 1.5 hours, so I'm a bit tired myself. But hopefully 2 top-down analysis examples is enough for you guys. I'll tell you one thing to do, and this will benefit you guys quite a lot. I got around 80 examples of trades on my Telegram. All of them are like very clean examples of this stuff taking place with the lower time frame analysis on it. If you guys want to backtest all of this, then take a look at this Telegram, t.me/Wally's trading. I think that's how it is. I'll get Mohammed to send out the links to all of you guys, and my Instagram @_Wally Khan. In my highlights, you'll find quite a few trades. Actually, I'll send the Telegram link into the chat. If you want to literally the points that we went over, if you want to see like a ton more examples of them, then everything's inside the Telegram. Message to everyone. Boom, there you go.
Yo, Wally, we done, yeah?
Yeah. I think that's enough for today.
Say no more. Guys, we ended the week with the best of the best. Honestly, the come up of Wally, I've got to see it personally with my own 2 eyes, and it's mad. And where he's gonna go is about to be even more crazy. But guys, Monday, Tuesday, Wednesday, Thursday, Friday, it's been a week full of value. I appreciate the opportunity to jump on board and educate yesterday. Wally, bro, thank you very much for jumping on board and dropping all these nuggets, top of nuggets, bro. But yeah, guys, we'll leave it at that. Drop Wally's Telegram a follow, and yeah, appreciate it. Thank you, guys. Take care.
Someone is spamming hard.
Hey guys, before we actually end this call, just show some appreciation to all the educators who've come onto this bootcamp, because they didn't have to spend all these hours and all this time to educate, but hopefully you all gain value out of it. Just drop some fire in the chat, drop some 111s in the chat if you guys did gain value out of this bootcamp. It's about to level up everyone's trading game, and I know that for fact. Alright guys, so without further ado, I'd like to end it here. Thank you so much to all the educators. Thank you so much to all the members who jumped on. Thank you, Wadi, for actually spending all this time to answer all these questions. We really do appreciate you both. Take care, guys. See you all at the top, because the bottom's too crowded. Peace.
Cool. Bye.